post the 2024 general election outcome, we caught up with Christopher Wood from Jefferies and his view on the India market, foreign flows, and of course his take on which are the sectors that could perform well.
I'm actually surprised that the market has rallied. I just checked the numbers. My Indian portfolio was down, I believe, about 11% yesterday, whereas the overall, I believe the Nifty was down 6%. So that doesn't surprise me unduly. Actually, I'm surprised. I'm surprised, given all the obvious uncertainties. I'm surprised the market is up today.
So why do you think markets are up today? Is this an indication that markets are saying that what's happened on the political front is something which is factored in and it is time to move on?
And I think it's a bit premature to assume that, because you still got the horse trading. I mean, clearly the base case is that the current government remains in power with coalition partners, and that's not a disaster. But the reality is the great virtue of the last 10 years has been clear government, consistent policies, and not having to worry about horse trading between parties, which is always a feature of coalition governments. So personally, I'm surprised that the market is up today. But the good news from the fund flow standpoint on the Indian market is there's been huge retail flows into this market in recent months, quite dramatic actually in terms of the numbers, which is why I'm surprised there's not more of a correction right now. But the positive point is that the foreign investors are barely overweight India going into the election, because the market had done so well that because driven by retail flows, the valuations were very high in the mid-cap space. So in my view, any significant correction in India from here will be met by foreign buying, who will see it as an opportunity. But I'm surprised the market's up today.
I guess what our viewers and what investors want to know are three simple answers. Answer number one, it appears that NDA 3 is on course to make the government. But with a weak, it appears and it is evident that NDA is coming back for the third term. Now, if that happens, there are three aspects which we need to consider and reconsider. Point number one, do you think at a macro level, which is on the aspect of tax collections, fiscal deficit, the way government has been spending in terms of capital expenditure, do you see the macro changing?
There's clearly a risk of a more populist element entering this next government. So that's what we have to watch out for. But that's actually more of a risk from a bond market perspective and currency perspective than a stock market perspective.
Second question, perception, which is always defined as PE multiple. India has been enjoying a PE multiple or a premium PE multiple for a variety of reasons. Stability of the government, solid growth, strong capex cycle, and great corporate governance. Do you see the PE multiple contracting, or the PE multiple of India will always be at a commanding premium?
No, I believe the PE multiple will remain at a commanding premium, but the PE multiple for the big caps is much less elevated than for the mid caps. The mid caps, there's definitely the likelihood there's a significant risk of a derating. But I think part of that risk relates not just to the election, but to any moves on capital gains front.
Third, Chris, is which are the areas where you think reform or government policy would be accelerated, and which are the areas where the government policy making could slow down or could take a back seat?
Well, I think an area where you may see one area you may see more action is to encourage affordable housing. But I would think where the risk is that the budget has very much been focused on capex and less on transfer payments. So that has to be a risk, because that has been a marked feature of this government.
Chris, every government has a unique, policy ideology. Modi one was marked with building digital infrastructure, fixing the power and the steel sector problems in India. Modi 2 was about boost to manufacturing, Atmanirbhar India, and making India very global in terms of the supply chain changes. What to your mind could be the hallmark of NDA 3 or Modi 3?
Well, I think that whole pursuit of building manufacturing capability, FDI, I think the focus will definitely remain on that, and that has been aided by the whole China plus one strategy. But I think the risk, I think we were hoping for a big agenda on SOE public sector reform. So I think that's where there's now the question mark on this new government.
So, Chris, if I start summarizing our interaction, can I say that in the way you look at India, even though you are surprised with the so-called political mandate, but you are not inclined to change your India view? You are still of the view that India is the best country to invest in. You are not changing any stocks in your model portfolio. And if at all there is a comeback in defensives like FMCG and some of the so-called consumption stocks, that rally would be short-lived.
That's basically correct. But if I was running my portfolio on a 3-month view, Nikunj, I would be making some changes. But the key question here is, which we don't really know the answer to as of today, is can the current government has performed, in my view, remarkable. In my view, the government of the last 10 years has been the best government in the world in terms of making positive changes affecting people's lives. So the question is that ability to govern fundamentally compromised by being in a coalition? That's the point we don't know.
Just to wrap it up with a few more follow-up questions. Today we are discussing the Indian election cycle. 3 months out, we would be discussing the US election cycle, which perhaps could have greater ramifications for how risk in the world would move. What is your take? How do you see things would move on a global front for global equities in general and for risk on trade in the run-up to the US election? Because the goalpost will now move from India to United States.
Well, on the US election, I think it's true. To me, there's just going to be a massive amount of noise. By the way, there's clearly going to be a massive amount of media-generated noise on these coalition discussions in India. On the US side, to me, the key issue is that the election is resolved with a clear winner. That the market will just want to see a clear outcome, because clearly the concern will be, given the divisive nature of US politics, given that all the polls indicate this is still a close race, the biggest concern is there's not a clear winner and you get a disputed election. That would be so to me, any clear outcome would lead to market relief, regardless of the outcome.
So far this year, India has underperformed global markets. Do you see it's a matter of time the tide could turn and India could start outperforming global markets?
Well, in the short term, there's a risk it underperforms more, I think. But it's not a dramatic underperformance, right?
Dramatic underperformance, just here or there, and in dollar terms, actually, it's not very stark also.
No, it's not. But in the short term, I think there's a risk of a more severe underperformance in India.
Okay. Let me record this, something which I'm sure will do very well on a digital platform, and I will be repetitive with this one, but I'll take my chances. And my question to Chris Wood is...
Are we still live?
We are live, sir. We are live. We are live. We are live. We are on TV right now.
Yeah, because I've got a noisy window. I should shut the windows.
No. Last question. This goes live on digital as well.
Yeah.
We'll cut it. My question to you is, more like a snappy one.
Yeah.
What is Chris Wood's short-term market outlook, medium-term market outlook, and long-term market outlook?
No, so short term, I'm surprised the market is not correcting more. I'm genuinely surprised the market is up today.
Medium-term outlook?
What do you define as medium term?
1 to 3 years.
And I remain positive, yeah.
And 3 year plus or 5 year plus?
No, on that level, I believe India remains definitely the best market on a long-term 10-year basis. On a 3-year view, there has to be the market that could outperform India on a 3-year view is Japan, if Japan really is coming out of deflation, because that's a major game changer. On a 10-year view, I remain firmly of the view that India has got the best prospects.
Exactly 1.5 years ago, Chris Wood added Zomato in his model portfolio. Zomato was at 55, now it is at 175. How did Chris Wood identify it, and which could be the next Zomato in his portfolio?
Well, I'm going to dodge that question because I'm hoping to be in India late next month, so I need to check things out. So I'm reluctant to make huge changes in my portfolio until I've been back in India.
All right, that's.
If you like this video, then like, share and subscribe to ET Now.